Hey everyone, welcome back to the channel. Today we're going to take a look at Alibaba. We're going to do a 5-minute valuation. So first thing, I've updated the income statement with our 2021 results. I know they've released Q1 for 2022. We're going to ignore that for now just because we don't want to deal with the quarterization, but they did have a pretty strong Q1 for growth from top line at least. So looking at it, you can follow this through and walk through the revenue valuation as you want. And I have a video, I think it was back in May of this year, where I actually walk through all my assumptions here and how I kind of come to this. But I built up what I think is a relatively conservative Alibaba valuation from a top line perspective, using GMV and then kind of a total kind of customer, others, commissions to GMV ratio, and then looking at some of the sub businesses as well and valuing those out like cloud and things like that. So feel free to poke around in this. You can download the link to this model in the description below, so feel free to do that. But anyways, back over to the model here on the DCF, you'll see it's all linked up. And then just one thing to note real quick, I held most of these things constant. So COGS, product development, so G&A, basically all of that. I have COGS slightly improving. I think it's been trending the wrong direction. I think over time it'll get better. So I have that improving. Everything else pretty conservative and, held pretty steady state. So now if we look at the valuation, and just for reference, all these numbers are in RMB. So that's actually incorrect in this header here. That should say RMB. So let me update that real quick. But what you'll see here is off here to the right, perpetuity growth method to get a valuation in RMB, and then the same thing in USD. So I think the big question about Alibaba is the WACC. How much risk is really in Alibaba, especially when you're looking at it from a regulation standpoint? There's been a lot of news lately about China wanting to delist companies, but then saying they don't. So there's a lot of questions of, as an American investor or a US-based investor or even a European investor, can you safely invest in Chinese companies, especially ones that have consumer data, which Alibaba has a lot of. They have a cloud computing business. They have all sorts of stuff, right? Even they're the Amazon of China, right? Very similar. So, there's a delist risk for sure, or there's a risk that the Chinese government's going to come in and say, hey, actually, your cloud business is no longer part of Alibaba. We want that to be separate. And they've done that in the past. I think it was with like Alipay. They came in and said, hey, that's sensitive. We don't need investors in that. That's going to be a private company or a separate company that only Chinese nationals can invest in, something like that. And they basically just took the company away and investors held the bag. So similar thing, and I think you have to price the risk appropriately, and I think that's the hard part. So if we think historically, S&P 10 to 11%, before inflation, so 7 to 8% after inflation, right? So clearly, this is much riskier than your standard S&P 500 company. If we think about private equity, they aim for 15 to 20% IRRs. So that's kind of what they're working with, and that that's an LBO. It's pretty risky. You're buying a company, you're hoping you can turn around. So let's throw a 17.5% whack on here. And what do we get? In US valuation, we'd get a $306 billion valuation. What are they? Let me see. I think I have their current valuation up. They're 332. That's not bad. And I think this is a pretty conservative model here, right? They've historically been growing in like the 30 and 40%. If they can keep that up for a couple of years even, and then taper off and grow at like 10% a year, I think they would blow this out of the water. Now, is 17.5% enough risk? I don't know, right? But if you valued this like a S&P company with 10% whack, right, you'd be like, oh, this is a $700 billion company. So I think if you believe in the long-term China-US open market relationship, I think this could be a great buy. If you don't, right, then I think you stay away from this because I think there's a ton of uncertainty. And I think that Alibaba's going to go up and down a lot before anything is resolved. And I think there's going to be things that get carved out in the future. I think there's things that won't be that people will think there should be. I think it's really a black box, but I think if you could hold for the long term, I think the pullback it's seen recently has made it a pretty attractive entry price. If you're willing to take that risk and you're willing to hold for, a decade plus, assuming it's not delisted. So definitely an interesting one to look at. Definitely read their most recent 20F. So you can still find it on the SEC website, but it's a 20F, not a 10K or a 10Q, because it's it's a foreign company that's listed on the US market through ADRs. But definitely take a look at it. Super interesting, interesting company. I have a longer video if you want to learn a little bit more, but this is just a quick update, 5-minute video to show kind of, where it's at and some of the things I think. I think it's pretty attractive. that you can almost get a 20% on this, being pretty conservative. So definitely something I'll be keeping my eye on to see how they perform in the future. Thanks so much for tuning in. If you have any questions or comments, please leave them below.